Great, everyone. Well, why don't we kick off? I'm very excited to be here with you today, hosting GetGround's Partner Success webinar. Really, the whole genesis of this is we have had a lot of questions from various partners of ours around how are we thinking about the market. As everyone here would know, it's been an interesting market, to say the least. Do we have any information to share, any insights? What is GetGround up to these days? How can we better help your clients? And so we decided to put together a few slides and take you through it. I think there is a way in Zoom, and correct me if I'm wrong, to kind of submit questions using the Q&A tool. And then at the end as well, we'll kind of go through all questions and kind of have a little bit more of a discussion. So today you have me here presenting, and I'm founder and CEO of GetGround. Been running the business for about 4 years now, live in the market for about 2.5 years. Before GetGround, I was a private equity investor at Apex Partners, doing leveraged buyouts, private equity deals for about 5 years. And before that, I was at McKinsey, which is a management consultancy. So I probably know a lot less about property than everyone else on this call, but I know a little bit about financial markets. And so hopefully I can share some of that today. And I'll let Chris introduce himself as well.
Thanks, Moubin. Yeah, I'm Chris. I don't have quite as impressive a background as you do, but I do have a property one. I've been in and around the property space for sort of the last 17, 18 years or so. Spent some time overseas, predominantly from a developer background, and moved across to GetGround about 3 years ago now to really try and take GetGround and the product itself out into the marketplace and really try and grow the business within the buy-to-let property industry.
Amazing, thanks, Chris. Cool, and so on the next slide, we have the agenda for today, and really we're going to cover a few things with you. One is some market insights, interesting times, let's share our thoughts on it. The next section is about an investor survey that we ran at GetGround. So this is proprietary information about the buy-to-let space. Very happy, by the way, to share any and all this information with everyone here on this call for you to use it as you please. We love getting information out into the ecosystem. A little bit about what's new at GetGround, about our partner ecosystem. Very proud to say we've got about 1,300 partners now. And then the benefits of partnering with us. So we're going to trot through that over the next hour or so. Cool. So property in uncertain times. I don't know if anyone knew, but inflation is up. And it's up a lot. Inflation in the UK is currently at 10%, which is the highest it has been for 40 years. And that is having some pretty fundamental impacts in the economy, not least the fact that interest rates are rising, uncertainty is increasing, but also the fact that I think consumers are looking for information, looking for confidence, looking for help in understanding how to navigate these uncertain times. And it's having a big impact for our mutual clients, our mutual customers. You know, if they have savings of £100,000, with a 10% inflation rate, they would be losing £10,000 of value every year. That's almost £1,000 a month. And so they're sitting there and they're thinking, my goodness, it's difficult to be holding cash. It's losing value. And ordinarily what happens during sort of times of market uncertainty is people actually tend to flock to cash because they don't want to do stocks. They don't want to do crypto. They don't want to do anything. They just want to hold their cash and kind of see what happens next. That's more difficult given inflation this time. And what's even more difficult is that we think inflation is going to be high for quite a bit of time. If you look at the Bank of England's own forecast of inflation, the chart on the right, I mean, they're expecting inflation to be up over 5% for almost the next 2 years. Our personal view currently, that's going to be higher than that. And so not only are you sitting there holding cash as a customer, which is now diminishing in value, you're also looking at it and saying, wow, inflation is going to be up for a while. How long can I sit on the sidelines with my cash? And how much value am I going to lose as a consequence of sitting on the sidelines for so long? And that's a bit of a dilemma, actually, I think, for our customers. So what do? How do they react? On the next slide, we look at some of the mainstream asset classes available to customers that we usually speak. Now, we say mainstream asset classes because there are asset classes that aren't available to people, kind of ordinary people like me and you. Complex derivative markets, even bond markets, commodity markets, these are harder to access. So really the three biggest mainstream asset classes in our minds are property, stocks, and crypto now as well. And we wanted to take a look and say, okay, well, how are these mainstream asset classes performing in the sort of market uncertainty we've seen over the last 12 months? And if you look at the graph on the right, I think this is an incredibly interesting statistic. If you look at Bitcoin and Ethereum over the last 12 months, they are down roughly 55%. It's a huge, huge fall. And if you look at the FTSE 250, so the top 250 companies in the UK stock market, they're down around, I think it was 26% actually. Huge amount. And in the same corresponding time, property has actually increased by 10%. And that was an incredibly stark observation for us to make, given how much uncertainty is in the market. And so we decided to probe a little bit deeper to try and understand what's going on. And so if you look on the next slide, we decided to peel it back and look over the last 4 decades. So we actually went back 40 years and we correlated house price movements with GDP growth. And what we saw over the last kind of 4 decades is there have been 4 big recessions. In 3 out of those 4 recessions, house prices were really, really robust, even though the economy was kind of receding. It's only in the global credit financial crisis in 2008 did house prices suffer, and their suffering was actually relatively short-lived. They dropped quite dramatically, but then within 12 to 18 months they grew 5% again. And so you start to say, well, actually, what we're observing now in the market, where property prices are remaining relatively robust versus kind of other mainstream asset classes, that is not an exceptional thing. That's actually what property does during economic recessions by and large. And so then you kind of say, well, it seems like there is something fundamentally different about property versus kind of other investment opportunities for the customers we speak to. And we started to think more about that. And on the next slide, we started to, well, actually, the next slide, what it says is people agree with us. If you look at kind of the commentators in the market and say, well, what do you think is going to happen to property prices sort of over the next 5 years? By and large, people are forecasting property growth. Property price growth, roughly around 3%. This is the Knight Frank data that we have here on the chart. And so what are the fundamentals? And a lot of you here will know these fundamentals pretty well, but I think there are some nuances here specific to the current environment that we face. The first is kind of the age-old and true demand and supply issue. We know in the UK that there is a demand and supply issue. It is estimated that we need roughly 340,000 new homes every year to fulfill demand. Last year, roughly 215,000 homes were built. That's a huge deficit. It was a 35% deficit. And that deficit didn't just happen last year, it's been happening over the decade or so. So the accumulated deficit, the accumulated difference between supply required to meet demand is actually really, really big. Now, the ironic thing is that this imbalance during recessions gets worse. And kind of one of the reasons for this is that most of the new homes built are built by kind of our wonderful developer friends. And during recessionary times, they tend to get hit hard. Whether that's a cost increase in their raw materials or increases in their cost of financing or uncertainty even in financing, it becomes a lot harder. And as a consequence, fewer homes are built. And so we see this demand and supply gap increasing, and even more so now in this inflationary crisis, because those cost pressures facing developers is even larger than normal, even larger than you would see in other recessions. The second thing I think which is worth calling is that property is foundational to UK financial markets. What we mean by that, it is intrinsically linked to the success of the economy. Property underpins the wealth of a lot of people in the UK. And so when property prices are falling, they feel poorer. They are poorer. And as a result, their consumer confidence gets hit and they spend less. And when consumers spend less, that impacts a lot of businesses. I dare say the vast majority of businesses in the UK. And so business performance reduces. Equally, property underpins a lot of the financial system. Think about how much mortgages are linked to kind of the value of property in the UK, and how those mortgages lead to other financial assets, whether it's through derivatives or being connected in some other opaque way. And so when property prices fall, not only do they impact consumer confidence and consumer spending in businesses, they also threaten financial stability. Now, the risk of both those things happening is large, and the impact of it can be really, really large for the UK economy. And so what we tend to see is that the government, the regulators, step in to support property prices when they think they're falling too much and threatening consumer confidence and financial stability. We saw that during the COVID pandemic. We've just seen it in the mini budget with stamp duty tax cuts. And so that is something that I think is a sort of a structural reason why property prices, I think, are going to be supported if something does happen. And then the last thing to kind of point out is that there is growing tenant demand. Incredible statistic from Zoopla: over the last 12 months, rents have increased by 11%. That is massive. That means yields have increased by 11%. That is incredible. And I think the reason for that is, one, it kind of talks to the demand and supply imbalance at kind of the first bullet point that we discussed. But it's also because there are changes in our demographics. So sort of the younger generation, I think, is more keen to rent. They want that flexibility from being able to move homes as and when they please. And so you've got a growing base in your population that actually want to be renters as opposed to owners. You've also got people not choosing to buy the first home that they purchase as their own home, but rather as a buy-to-let, given prices are maybe more accessible in other places than where they live. And then again, I call out what happens in recessions. During recessions, tenant demand actually increases, and people are less likely to purchase their first home. Greater uncertainty, greater difficulty getting the financing. And so tenant demand grows. Structurally, it's growing, and it grows in recessions. And so we think these are three big sort of fundamental reasons kind of that underpin that robustness in property price that you see over decades and over multiple types of recessions, whether it's a dot-com crisis, a financial crisis, an inflationary crisis, a COVID crisis. Property prices have shown to be very robust, particularly relative to other asset classes that people are able to access. And so if we switch to the next slide, we've gotten a lot of comments recently about the kind of turbulent times we're seeing in the mortgage markets. And yes, mortgage markets have seen a lot of volatility. Swap rates have increased. There's a lot of uncertainty as to how the fiscal policy being adopted right now kind of counteracts the monetary policy being adopted right now. And rates are rising. And rates have risen a lot, actually, in the last few months. We've gone from seeing mortgage rates of 2% to thinking that 5 or 6% is a good deal. That is true. That is a tremendous movement. And so our customers kind of come back and talk to us. And I think the first thing to kind of really appreciate is, if you look at the chart on the left, that is the Bank of England's interest rates over the last 4 decades. Except the last decade, the interest rate has always been roughly or above 5%. And during those times, we've had thriving property markets. So actually the anomaly, the exception, is the last 10 years when rates have been artificially low. And if you look back, there is no reason to think that you won't have thriving property markets at higher interest rates. I think the thing that makes it more difficult right now is that when rates move up or down very quickly, that's what causes uncertainty. That's what causes people to pause. But look through the kind of quick swings that are happening right now and realize that actually once they're up, even if they stay up, as long as they're staying stable, you've got that certainty and you have a thriving property market. I think the other thing to point out, which is sort of a difficult concept for people to grasp, and so I'll kind of go through it step by step so that we can explain it to our mutual clients, is that actually mortgages now, I'm going to laugh at what I say, but it's true, are cheaper than they've ever been. And that is in real rate terms. What I mean by that is the inflation rate currently at 10% is larger than the interest rate on a mortgage at 5%. And so actually, if you take the mortgage rate of 5% and you minus inflation, you're at minus 5% real rates. What does that mean? What that means is the value of the loan you took is actually decreasing. So let's give an example, and I'll give a really, really extreme example to help us kind of get our heads around it. Let's say we rewinded back 70 years to the 1950s. And in the 1950s, a house cost £50,000. £50,000 was a lot of money in the 1950s. And I wanted to buy it, and I had £10,000 to spend. So I took a loan from someone for £40,000. I didn't pay back a single penny of that loan. I just kept it there, just there, interest only, paying whatever interest I was charged for it. And if we fast forward today and I suddenly decide, hey, you know what, I'm going to pay that loan back now, £40,000 is worth a lot less money to me. You know, I can barely buy a car for £40,000, and back then I could buy a house. The reason the money is worth so much less is because inflation has eaten away its value. If you took the argument to extreme and said, let me not pay it back again for another 200 years, imagine in 200 years' time, for £40,000, you probably wouldn't be able to buy a lollipop. Without paying back a single pound of your loan, you would have literally paid back the entire loan's value with inflation. And so, given inflation is so high at 10%, even if you're paying 5% interest for a mortgage, you're still at minus 5%. So the whatever money you took from the bank is losing minus 5% of value every year. Do that long enough, and that loan will be worth nothing. If you look at it during healthier inflation environments, let's say when inflation was 2%, and someone comes along and gets a mortgage with an interest rate of 3%, actually, the value of the money is that they owe the bank is increasing, because the 3% interest minus 2% inflation is still plus 1%. So mortgages, if you think about them on real terms, are actually the cheapest that they have ever been. You're not getting free money, you're being paid to take the money. And that's a really sort of important thing for our mutual clients to understand. And what's also really important is to kind of understand that this volatility is probably a short-term thing, whereas their property investment is a long-term investment. If you're going to hold your property investment for 10 years, and you take out a 2-year fixed mortgage today at 5%, which by the way is negative 5%, so it's actually really cheap once you understand that. But even as 5% absolute terms, it feels high. You've only got that for 2 years, and then you refinance when the markets are more kind of steady. If you look at the additional cost of your mortgage for those 2 years versus your 10-year investment horizon, its impact is a lot less than you would think. And the last thing I would say is that if investors are using the right structure, limited companies, for every bit of increase that they see in their mortgages, they get some of it back in taxes. And so actually the increase in mortgages in absolute level to their net cash flow is shielded kind of from the gains they get from lower tax bills. And so it's sort of muted in some ways. And so despite kind of the headlines, the newspapers, the absolute mortgage interest rate going from 2 to 5%, mortgages have never been cheaper. And if you couple that with the fact that cash savings have never been losing value faster, and the fact that you've got an incredibly robust asset class in property, I think it's the best hedge you could do right now. So if you flip on to the next slide, what strategies could work in this environment? Because not all markets are equal. What works in this inflationary environment with lots of uncertainty? One is, I think, a move towards high yielding properties. And we're already seeing this. And I think everyone here on this call would know this better than I. There is a wide spread. In St. Albans, you're talking about a 2.2% yield, whereas in Bradford, it's 11.3% on average. You can think about different types of properties, whether it's short lets, holiday lets, HMOs. There are ways to increase yield in order to maintain cash flow positive, even with higher mortgage interest rates. Using limited company structures to buy in groups. We've seen this happening. And so people don't even need a mortgage. I was going to buy this with just my wife, but actually, you know what? I'm going to bring in a couple of my best mates and we're going to buy it without a mortgage. Keeps our cash safe because it's now an asset that's robust in terms of prices during recessions. And then we can refinance and take our money out later and part ways if we wanted to, or continue in that same property. Limited company structures allow you to do that very easily and to be protected by legal documents in case things go wrong. Those with non-GBP denominated savings, we've seen a lot more of those people coming to the market. There, as you know, has been a lot of devaluation in the pound and a lot of strengthening of the US dollar. A lot of people hold savings in US dollars around the world, not just in the US. And we see them coming here to get really big effective discounts on property purchases, and we're quite excited about that. We see investors taking out shorter term debt, knowing that this current market is relatively volatile and they can refinance in a couple of years. And we see people purchasing properties off plan that are going to complete in the next 1.5 to 3 years, knowing that they're locking in today's purchase price and then coming into the market for financing when it's likely going to be more stable than it is today. And I think all of this really points to the fact that us as a network, GetGround together with our partners, really have an opportunity to step into the market, to lean into the market, to educate the market, to educate our customers, and to provide them with the information, the data that enables them to make more informed decisions around how to navigate these uncertain times. And I think there's going to be a lot of demand for that in the coming months and maybe a year or two more. Great. I think that was me, Chris, right? Next slide.
I think so. Yeah, I think that's it. No, it's super interesting to hear a bit more, from a financial perspective, financial background, and I'm sure it's been really useful for those listening to it. My role really today is just going to talk through a little bit about some of the research that GetGround have undertaken, particularly over the last sort of 3 to 6 months. Talk through a little bit more about sort of where we've come from, what we're looking to do, some of the changes we've made within that, and really how we've done all of this and want to continue to do so with and using our sort of the partner network. We've got a really great network built up of sort of 1,300 partners, as Moubin's already mentioned, and equally one that's continuously looking to expand as well. And the first thing I really want to just touch upon, really, which again is something that everyone will know, is that the UK property market is a very international one. It is a global market. The largest marketplace definitely for UK property is in the UK and for those residents based in the UK. But there is a huge amount of investment made in the UK property market from those based overseas. And some data from the HM Land Registry back from the middle of 2021 would indicate that these top 5 countries, or the residents of these top 5 countries, are the largest buyers of UK property in that, being from Hong Kong, from Singapore, the US, UAE, and then Malaysia. And really interestingly, this is data that very much corroborates with that of our own. We now have 5,000 limited companies on our platform, We now have shareholders from residing in 50 different countries, and we've now got £1 billion of property on the platform itself. And really interesting to see how our data very much corroborates with that of the HM Land Registry. When we first launched in terms of servicing clients back in 2020, January 2020, in that first 12 months, I'd say probably about 80% of our clients were based overseas. It is now, as of today, a much more 50-50 split as we've really grown and developed our UK partner network, but certainly one that is very much of interest to the UK market to all of those based globally. If we just go on to the next slide, because I think what's been really interesting, now that we've got this sort of volume of customers using our platform, and within that 5,000 companies, there's now sort of 12,500 different users and shareholders within that. And it's given us the opportunity to go and do and ask them a load of questions and actually produce some research very much of our own and create some analysis that I think is really interesting to share with everyone on the call today. And that is that 95% of landlords report that transaction costs have increased in the last year, which I think we all probably know about. We've obviously chatted a little bit about mortgage costs, but conveyancing costs, property purchase prices have gone up. Stamp duties are continuously being amended and evolving, and in most cases going up, particularly when buying for investment purposes. A huge amount of landlords, 93% of those, have reported that finding a property and a good quality property in a location that is really of interest to them is very, very difficult. 88% of landlords report that actually coordinating all of the parties involved in a property purchase is very difficult and far more challenging than I think it used to be able to be so. And I think certainly for me, having gone through the process myself, I very much agree with that. And really, there are so many more partners involved now: developers, agents, conveyancers, property management firms, solicitors. And it's really just trying to bring all of those parties together to make the process be as quick and as easy for the investors as possible. And a number, nearly 3/4 of all investors have reported that actually they've had a property transaction fall through. And that is a real concerning factor, I think, and a lot of that is linked to the length of process or the length of time it takes from reserving a particular unit, getting through that property cycle to a completion stage as well. And then 1 in 2 have found that the market supply is actually very, very low in terms of number of properties that are available, but also that the quality of property or the quality of the investment property is very low and difficult to identify where to buy and actually which information to trust. And really from GetGround, we've tried to take ourselves into a very centralized position within the buy-to-let industry and really look to try and help our investors, but also help our partners. How can we help more and more transactions take place? And how can we help those take place in a far more smooth and seamless process? And so if we just go on to the next slide, just going to talk a little bit about GetGround and say how we've developed, how we've evolved over the last 4 years from when we were actually incorporated as a business, and then particularly in the last sort of 2.5, 3 years when we've really been servicing our clients. And Moubin, one of the founders, and his brother have a very simple, or not simple, I should say, but a very simple statement. It's a very challenging mission, but to enable a much fairer way and to really bring the world's assets online. And the big starting point within that is the UK property market. There are other assets very much in the pipeline, which I'm aware of, but we're solely focused on the UK property right now. And there is an enormous market there for us and for everyone on this call to really target and identify and to try and make it better. And with that, we've started off with limited company structures. We've then developed that limited company solution, which I'll come on to with the bringing in of the potential to use a whole company. We've recently launched a Get Property service, which I'm again just going to spend a couple of slides going through. We now have a solution that is designed for accountants. How do we best work with accountants, which is a really interesting one, given that many accountants, I think when we first launched, felt we were likely to be competition. And actually we've moved forward to 2.5 years later, and it's all about how can we work best together to collaborate and provide the investor with a great experience, and then just the wider buy-to-let marketplace within that. So just going on to the next slide, I'll start with the limited company structures and really the core product of GetGround. And really none of this has changed from when we launched within that. And that is that we specialize in setting up and then running UK registered limited company structures for the sole purpose of buying investment property in the UK. Very simply, we create special purpose vehicles, often this abbreviated to SPVs, that are designed specifically for the purpose of buying investment property, regardless of where any shareholder is based. We have developed a very unique solution, one that can all be accessed online and essentially making the benefits of a limited company structure more easily accessible to all investors. It is also a unique turnkey solution whereby we do the company formation piece, which includes the opening and the creation of a limited company, the registration with Companies House, the structuring of that company, the production and verification of all of the legal documentation, the opening of a business account for that limited company in the setup piece, and actually creating an operational business that can transact and designed for purpose, i.e. buying property. And that's really, really important. And for all of us on this call, our clients can do all of that within 20 to 30 minutes. And then we can incorporate that limited company within 24 to 48 hours, have all of the legal documentation issued to all of the relevant parties, predominantly the solicitors, to enable exchange and completion timescales to be met. And then once that company is actually set up and is operational, we do all of the secondary part of that. We do all of the ongoing financial administration for that customer and for that limited company itself, including all of the accounting services, the financial administration, the tax filing, the creation of the tax returns, the submission of the tax returns. We act as the registered office address, and we take on the role of the company secretary as well. So really designed to make a really nice, simple solution using technology and to give the investor a much easier and much better experience when it comes to investing in the property market. And if we can just go on to the next slide, we can talk a little bit about why using limited company structures. And what we've seen over the last few years is that in the last 2 years alone, actually over 50% of all buy-to-let transactions in the UK is done using a limited company structure. To put that into perspective, back in 2015, 2016, that was about 14 to 15%. So there was a considerable shift in using a limited company structure now when it comes to buy-to-let property. And the very simple reason for that, in my own mind, is there's a couple of reasons, actually. I think the biggest governmental change that came in 2016, 2017, was the inability now, if you bought a property for buy-to-let purposes in your own name, to offset the mortgage interest against that income that that property generates. And Moubin has already touched upon that when talking about the mortgage rates, which I won't dare to go into as much detail, financial mathematics as that. But it's a really, really important concept, because now having that inability to offset the mortgage, which is the highest associated cost, means that an investor will be liable for more tax than they would have been back in 2015, 2016. And a limited company can help mitigate that, because using a limited company structure, you can still offset 100% of that mortgage interest against the income that that property generates. So that reduces the perceived profits, which then means you become liable for corporation tax, which corporation tax is only due on the profits. So you essentially pay a lower rate of tax on a significantly lower amount of money. And I think that's been the biggest fundamental reason from a tax perspective as to why we've seen a shift towards limited company structures. You've then got providers like GetGround offering a very cost-effective, easy-to-use solution. And again, that didn't used to exist 5-6 years ago. The old route of using accountant solicitors was a very expensive process, both on setup of a limited company, but also that ongoing financial administration and the ongoing accounting side of things. But also it was a very time-consuming process. Again, on the setup piece, where it would often take weeks, if not months, to set up and open a limited company structure, but also a very time-consuming process when it came to managing all of those financial returns, the financial statements each and every year. So there's now providers that have accessed that and made these benefits more easily accessible. And then I think the third biggest one, and again, we've touched a little bit on mortgages, but there has been a significant shift in mortgages. When I started working in the property market, and not really until that long ago, taking out a mortgage in a limited company was very much specialist lending. And really that's no longer the case. We've seen a lot of mortgage lenders evolve and move into this space, given the increasing popularity of limited companies being used within that. And really that has made, in general terms and a broad statement, mortgage financing a lot easier to utilize. The principal reason why limited company structures are used, I would say, or the one that gets the most amount of attention, comes from tax benefits. And I'd be delighted to set up a call individually with any partner here, both existing or indeed a new partner, to really run through where those tax benefits can exist. I think there's a lot of detail we can go into, but we do have audited tax examples that show for a UK resident, a limited company structure can help increase post-tax profits from anywhere from 22 to 66%. And for the overseas resident, that post-tax profit increase can be 52 to 66%. So a really significant increase in the cash flows and the profits and the returns that can be made when using a limited company structure. There are also a number of other benefits of using a limited company structure, such as reduced personal liability, it offering greater protection. It's a mechanism that makes it very, very easy to buy and sell with multiple persons. And because of that very fluid and flexible structure makes it much better when it comes to inheritance and estate planning purposes. And again, I'd be delighted to kind of go through all of this in a little bit more detail with anyone on that. But there's a whole heap of reasons as to why limited company structures can be beneficial. And one of the things we will always do is look to have a consultation with any client to provide them with this information and their education to allow them to make an informed decision. So if we could just go on to the next slide, please, Noor. As I said, we've now evolved our original solution, which, as many of you will know, with those who have worked with us for a couple of years now, we used to have a standalone limited company. We operate on a one limited company per property model. There are significant tax benefits to the individual and to the investor for doing so, as well as our cost structure enabling that to be a more justifiable way of actually structuring any property investment. A standalone limited company is a limited company created by GetGround that has 100 shares, and any number of shareholders can be a shareholder within that. Typically, it's around 4, I'd say, as a maximum, more from a mortgage perspective, but there is the ability for more shareholders to exist within that, making it very easy to allocate and apportionate shareholding to each individual user. However, a lot of our customers were telling us, particularly actually in the last 6 to 9 months, I'd probably say, Moubin, that we started to see a lot more requests coming in from customers asking about hold companies. And hold companies are a similar structure. They are a limited company structure that sit on top of any other standalone SPV. And where they have worked very, very well is for those portfolio investors, those either who are looking to build a big portfolio over time or looking to purchase multiple units, large-scale investments in one go. And we saw this being requested commonly, and eventually we managed to convince the product guys to create a new product design for this, and they've done a brilliant job for that. So we've now got 2 options when it comes to actually talking to customers. We can further identify who are they, what are they trying to achieve as part of their buy-to-let, their property investment experience, talk them through the pros and cons of each individual one, and again, enable them to make an informed decision as to which structure will be better for them. But the point being here is that we've expanded actually the offering that we now have from when we first launched, and that's all come from feedback we've received from our customers and indeed from our partners over the last couple of years. If we just go on to the next slide, please, Noor, just going to talk a little bit about pricing, and then I'll move away from limited company structures. But I talked about having a very cost-effective solution. We have a very, very simple pricing model, a very transparent pricing model, and I think transparency is very much at the core of what we're trying to do and achieve at GetGround. We have a one-time setup fee that covers all of the setup services that I mentioned earlier on. So the opening and the creation of the company, registration, the structuring, the production and verification of all of the legal documentation, the opening of that business bank account within that. It includes working with all of the other partners involved, solicitors, mortgage brokers, etc., to get that property purchased through to exchange and indeed to completion. And for a UK resident, that is 149 plus VAT, and for those based overseas, it is 499 plus VAT. Those services are exactly the same, but for any individual based overseas, there is a more expensive onboarding process when it comes to KYC and AML, and that very simply is why there is an adjustment in price there. Moving forward for the second part of our services, I was just going to talk about the £19 a month, but the ongoing cost for that customer, regardless of where they are based, is then £19 a month, which means that an individual can run their limited company structure for £228 plus VAT per annum. And that covers all of that financial administration. It covers all of those other services that I mentioned around the company formation, not the company formation, us taking on the role of the company secretary, us taking on the role of the registered office address, us taking on the role of the accountancy services, and predominantly around the creation and the submission of that company tax return. And what's really important here, I think, is we talk about that one limited company per property model, but in order for us to maintain our price advantage within the marketplace, we would only charge that setup fee for any individual for their first 2 limited company structures. And again, that is something that's very much at the heart of what we're trying to do, offer this very simple but cost-effective solution. We're able to be cost-effective because of our utilization of technology. We're able to automate a huge amount of the processes here. And actually, one of our early stage investors was the UK government by way of HM Land Registry, and that enables our platform to talk directly to Companies House, which is where the company formation takes place, but also to HMRC at the back end around the company financial administration services. And that just enables even further levels of automation, which is why we're able to operate at sort of 8 to 10 times more cost effective than the traditional alternatives. Now, if we can just jump on to the next slide, please, Noor. Just going to talk about a couple of the other recent changes that we've made. And the first of which is what we're calling Get Property. And I think what we've done very much in the last sort of 6 to 9 months is really understand that property is at the heart of GetGround. And most importantly, property is at the heart of GetGround's customers. And it's very, very important that we align ourselves within that and within the partner network for that. We've seen a huge amount of interest in the services that we offer, and we have seen that both from inbound referrals from our partner network, which has been greatly received, but also from those that have found us directly, whether it be marketing activities or more B2C-led events. And particularly for those coming to us via our B2C channels and the marketing channels, we found a lot of these investors wanted a lot of hand-holding, a lot of support, and actually predominantly asking for us, how can we help find them a property? And really, we then put our heads together internally and realized that we have a fantastic network of partners already in existence, ones that we already work really, really closely with, and hopefully support their customers with their transactions when it comes to setting up a limited company. And in the main, those partners are actually selling property in the main. How do we better work with these partners where we can connect investors looking for property that matches their requirements that are being sold or promoted or marketed by our existing partner network? Really cool, really nice idea. With the idea behind it, how can we find and help investors find high quality properties, high yielding, high performing properties? We talked about the research that GetGround have done previously and how many people were struggling with that. How can we remove some of these hidden costs? How can we bring down the speed of the process and make it a much faster process? And we thought if we can build this network and really develop it better and really work with our partners in a more collaborative way, we can help the investor and actually help one another achieve what we want to achieve within that. And so what is Get Property? Just moving on to the next slide. How does that actually look and how does that work? Well, from our side of things, we are not looking to compete with any of our partners or agents that are selling property. The way we are looking to do this is to promote or sell to our clients packages. But before we do that, I'm just going to take a step backwards and say that very clearly and very clearly defined, we have what we call a conflicted lead and an unconflicted lead. If any introducer makes an introduction to us, to a client, simply with regards to limited company structure, that client is ring-fenced and that client will not be cross-sold to. We are not looking to take an introduction from one agent and then introduce that customer to another agent promoting another property for what I would hope is very obvious reasons. And we'd be very happy to give anyone a demo to show that how we've done that. We've built and spent a lot of time and money on technology to prevent that. And actually was giving a demonstration of this earlier on this morning, and it looks fantastic. And it's very much there to protect our partners within that. So first and foremost, if anyone does still introduce us to a client that they just want to have a chat about limited companies, that still exists, and that client will be ring-fenced from cross-selling in any way, shape or form. However, what we're really targeting when it comes to these packages is those that come from an unconflicted basis. And generally what we mean by that is those that we've obtained ourselves from a marketing-led or organic approach, or perhaps, just to give an example, a mortgage broker has introduced us to a client. They will take care of the mortgage, but they're aware that that client is looking for a property and they have yet to identify one. With the permission of that mortgage broker, we would look to help find that property or that client a property by way of these packages. And we have a couple of different packages, one of which is the helping hand, one of which is the peace of mind. Slightly different levels of service. The helping hand is very much us hand-holding the client through, but almost them doing their own work themselves. We would simply make the relevant introductions to the right people, the right networks, whether it comes to property, mortgages, property management, conveyancing. Or the peace of mind, which is this turnkey solution again, and the 588 within that includes all of the other costs that are involved within that. So a client would essentially pay us that money, and that money would then cover the mortgage broking fees, the solicitor fees, which we would then compensate and cover that for them. But hopefully it is a way we can connect investors to very high quality property in particular, but also high quality providers of any other affiliate service that's right for them. It's taking an unbiased approach, and I think that's a really interesting view, and certainly one we're looking to promote, an unbiased approach of how do we help an investor work with our existing network, but get that investor through the buy-to-let experience as quickly and as smoothly as we possibly can. And how do we start fixing some of the research data that I sort of talked through on a couple of the earlier slides within that. Again, very happy to talk to any particular partner, whether it's an existing one or indeed a new partner, about how we can better work together when it comes to Get Property. We would absolutely welcome the chance to have a conversation about how we can support and make introductions to you and help you hopefully market your developments in particular. If we just go on to the next slide, please, Norm. I've sort of covered a little bit about this already, actually. Sorry, on the previous slide, I sort of got ahead of myself. But like I say, it's really trying to bring a very joined up approach to help the investor through this whole process. How can we bring a much more trustworthy, transparent, in some ways regulated buy-to-let experience for that customer, and make sure that they are dealing within that? I think from a limited company structure, for those partners we've worked with for a couple of years, one of the biggest value adds we've been able to do is really easily and simply explain tax to customers, or explain the buy-to-let industry and how it helps using a limited company structure. We've been able to get investors to an informed place and a position where they can transact quicker. And really what we're trying to do is evolve that and expand that to a lot of the other services. How can we get these investors working quicker, getting them to buy property, understanding that now is a good time, regardless of the marketplace, regardless of some of the challenges that we're facing, because there are many good reasons as to why someone should be buying today, as there will be in 6 months' time. We all are aware of the fundamentals of that UK property market. They still exist in any market, but actually it's more of a case of how do we streamline the process for those investors and take that interest through to completion. Just the next slide, please, Norm. And then just finally, the latest release is the accountants, which has also gone live in Q3. The product team have been extremely busy in the last 3 to 6 months or so. And I said right at the very beginning that I think one of the early sort of feelings towards us when we first launched and went live was that we were likely to be seen as competition for accountants. And I suspect actually for the first 12, 18 months that probably was the case, each one having their own area of expertise, of course, but I suspect that was a little bit more in a competitive approach. But in the last 12 months, we've actually been approached by a number of accountants coming to us asking for a way that we can work together. And what we've done with that is to create and design a bespoke solution that is accessible to the accountant network. And very simply, we are giving the accountant and their company access to our software. The accountant has the solution. They would deal entirely with the customer. They would never need to connect that customer to GetGround ourselves. We wouldn't even talk to that customer. The accountant would still talk to them about limited company structures, and if they wanted to go ahead, they could do so, and they would use the GetGround software to make sure that that limited company can be set up very, very quickly. The same timescales would exist, 20 to 30 minute setup, limited company incorporated in 24 to 48 hours, legal documentation verified, produced very, very quickly thereafter, and the opening of that business account as well. The accountant would maintain control over their own pricing, over the company structuring, and indeed over the customer relationship. We're simply here to affiliate and support them in executing that transaction. And they can utilize our services and leverage what we can offer to their customers without the need to pass over or introduce that customer to us, and therefore give up the relationship that they have with that customer. And if we just go on to the next slide, please, Norm. And we're really excited about this, and I think it's a really interesting opportunity for us, and I just think it continues to show the evolution that GetGround has had in sort of 3 years, which is as long as I've been here for. It often feels like it's a lot longer than that. It also feels like it's a hell of a lot shorter than that, but it is this continual want to try and improve and develop ourselves, but also how can we better support the buy-to-let industry. We're very aware of the involvement that accountants have within that. They do a fantastic job. There are a lot of investors who want to use limited company structures in particular, but even if they don't, they need the utilization or the support of an accountant. And really what we're trying to do is provide our own software, our own technology to improve those services and improve that marketplace as well as giving their investors access to that marketplace, and indeed some of the packages that we've already talked about, whereby we can help their clients find property, find the right mortgages, and perhaps be an expert within that buy-to-let industry in a way that some accountants can't be or don't have that exposure to. And then that's it, really. I think final couple of slides just to finish off, and then absolutely we'll try and leave a bit of time for question A, but we've already sort of talked about the partnerships we've developed. We have a very strong relationship network already. We've got over 1,300 different partners within that of all different types. property agents, estate agents, property consultants, developers, accountants, tax advisors, IFAs, mortgage brokers. We are really starting to work with pretty much everyone involved within the property market space, but particularly in that buy-to-let space. We've got a couple of really large partnerships and also some smaller firms, but ones who are doing a fantastic job, and I think we're working with very, very closely. And we'd love to widen that network with anyone new to this call, and we'd love to have a conversation with that. And with anyone that we've been working with this on for the last period of time, thank you for all the continued support. We're really keen to kind of keep evolving it with you, and we'd love to work with you to continue trying to improve that. And I think all the last couple of slides I've sort of covered around really already, so I think we can probably just go straight to probably a little bit around the Q&A if there are any questions. Aware that we only got kind of 10 minutes left, but on this slide is some of the reasons why the partners will work with us, or indeed have continued to work with us. Very easy solution. We're here to help. We're here to be a value add to your own services. We've got a very easy referral process. It can be done by email, it can be done by landing pages. We're very happy to fit in with your sales cycles. We won't impact the speed of a sale because of the speed at which we can consult a client. That consultation is free. The speed at which we can then set up the limited company, exchange completion deadlines won't be impacted. We can help, I think, our network really attract more and more investors. And of course, finally, we do pay a referral fee as well. I'm very happy to talk more of that as well. But we very much focus on more the value add we can bring. But there is a small referral fee of £200 per limited company that we will pay when we are introduced to a client that sets up a limited company structure with us. And that's it. Appreciate there's a lot of information there from myself and Moubin, and really happy to answer any questions, both of us, in the sort of final 10 minutes or so that we've got.
Great. So why don't I pull up some of these questions here? I think there's one question here around how do you evenly distribute inbound leads to your partners for them to present their offerings? That is a great question. I don't know, Chris, if you want to take it, or shall I?
Yeah, I think the simple answer really on that is that we will create a fact find with a client as part of that package. So we will really get to understand who they are, what they are looking for, and then we would look to introduce them to a partner offering something that met their requirements. We're not looking to sort of fire out introductions to everyone and anyone. We don't think that will provide the customer with their sort of the best experience. The idea for us is to come from a data-driven, very analytical approach based on their requirements, and we can then identify some properties that match their requirements, talk them through to that, and then connect them to the relevant party, so that what we see is that we are introducing high quality in leads to our partners, not necessarily focused on high quantity. Moubin, obviously, if you want to add anything to that.
Yeah, no, that makes total sense to me. And of course, if you'd like to be more involved in our buy-to-let marketplace, Get Property, just get in touch with Chris, and we're happy to kind of discuss that through with you as well. Next question here: is it good advice to set up a limited company if UK income is less than 50K? Now, what we don't do at GetGround, is that is we do not give people personal advice. And what we can do is equip them with with the fact set in order for them to make their own decisions. We have on the platform a lot of UK resident customers on the basic rate, tax rate, using limited companies. And that's because the benefit that you are able to potentially get from limited companies is very far and wide reaching. Whether it is kind of mortgage interest deductibility, which that specific point I think refers to, is one thing, but there's a whole other host. Whether it's the ability to kind of flexibly buy with business partners, protect yourself with legal documents, better protect your personal liability, think about inheritance or estate planning. Really, there's a whole host there. And so we have found a lot of customers at the basic rate using our product, and who are quite who find very compelling reasons within the kind of menu of advantages that the company can provide. Of course, it's not right for some people, and they may come to that decision once they listen to the fact set that we provide. And if anyone that we speak to is wanting personal advice, we're able to refer them to, again, our partnership network, some tax advisors, some accountants who are able to get the nitty-gritty and give them personal advice, but of course charge for that. I don't know, Kevin, if that's okay. I don't even know if Kevin can talk right now on this call, but I hope that answers your question. If it doesn't, just ping another message in here and I'll try and do a better job. Is the £200 on every limited company they create or limited? It's limited to 2 companies per customer. And the reason for that is we only charge our customers twice for the setup fee. And so we are unable to continue paying out a referral fee once we stop charging our customers for the setup. But that means on a single customer, you're looking at £400 if they set up the 2 companies. Another question here is if you have partners offering the same opportunities, how do you fairly introduce them to the partner? So this is with regards to the buy-to-let marketplace and Get Property. Let's take an example of 2 partners both marketing the same property, both of whom are on our marketplace. We would then just randomize the leads. So the first one comes, it would go to one, the second one comes, it would go to the other, and just do it in total random sequence. It's very important for us to kind of, as GetGround has always been, maintain a really unbiased, transparent, data-driven approach to everything that we do. That is with our customers, that is with our partners, and that is sort of the ethos that we sort of live by. I don't know, Chris, anything to add from you there on that side?
Yeah, no, I think that's it really. I think the only thing we would look for is just to make sure that obviously partners and those promoting property have the ability to market property. I think that's the most important thing. And obviously if both partners do have the ability to market that property, then as Moubin says, it would be sort of on that random basis really. But providing both partners, if there was more than one having the same development, had the ability to do so, we would absolutely look to share those leads on that sort of random basis, 50-50. Oh, Moubin, I think you're on mute.
Sorry, I'm on mute here. What is the commission on referrals that buy property on Get Property? Does this, I don't understand the question. Does it mean what commission does GetGround take from, Chris, do you understand the question?
There's a comment just below it to the client. So he says to the client, sorry, which I'm guessing might be linked.
What is the commission on referrals that Get Property?
I think from a client perspective, in terms of the investor, what I would say is we have these 2 packages and they are flat rate fees and both of them come with a saving. So for example, the sort of the larger package, the Peace of Mind, which we charge 588 for, we believe that is packaged up and worth about £9,000. So we don't pass on a commission as such back to the client, but we would give them essentially a one fee that would cover all of those fees involved in that transaction, and we believe that would be lower cost than if they were to do it individually via multiple partners. So there wouldn't be a commission back, but equally I appreciate if we misunderstood that, happy to expand on that.
What comms do we get for a purchase? So another question has come here, thanks Darren. They are saying, what comms do we get for a purchase? So the way that the economics work entirely is we charge the customers a flat fee for a package, like Chris has said. So that's whatever, £1,588 and almost 6,000 for the Peace of Mind. That's just a flat fee that gives them the service that GetGround provides in the end-to-end transaction, making it more seamless, convenient, and with information and data so that they make better decisions. We then use various partners to provide those services to those customers. So, and GetGround will get a commission from those partners to provide that service. And so, you know, if a partner wants to list property on our platform, if we help them sell their property, GetGround will be paid a commission. Equally, if we send a referral to a mortgage broker and they take a mortgage, GetGround gets paid a commission, which are sort of the industry standards. So that's how GetGround makes money. Our customers are charged just that flat fee, and how our partners' economics work is that they sell more of the products that they sell on a day-to-day basis, whether that's property or mortgages or advice or whatever, and pay away the fees that they're used to paying in the industry. I hope that answers the question. If I still haven't answered it, please ask it again. Is it possible to invest in GetGround? Thanks, Kevin. That's a lovely question, and we're very flattered. The best way to invest in us is to work more and more closely together and drive our collective businesses forward. GetGround is not at the moment seeking investment, but thank you for the question. We're flattered. Darren comes back again. Do we get a share of the commission for the purchase? Do you understand the question, Chris?
Yeah, I think what's saying actually, so we get a commission. Do we then pass on some of that money to someone who introduces? If someone like a mortgage broker introduced us to someone who then did buy a property, would we pass back an introducing commission? And the answer is yes, we would within that, and we can absolutely have a conversation with you, Darren, and anyone else who's interested on that. But there is a runway we do that where we can take it back and funnel it back through in much the same way we do when it comes to just a limited company structure. We would do so a similar arrangement for someone buying a package.
Yeah, absolutely, and we're very keen to do that. Sorry, Darren, I didn't understand the question. Just as we do with limited companies, we do it for packages, and you know, mind you, packages are 2.5 months old at GetGround, so they're being built in flight. To understand, you introduce a client, partner sells them a property, partner pays GetGround a fee for the intro. Yes, that is correct in some situations, and in some situations not. So in some situations, we introduce a client to the partner sells them the property, and GetGround gets paid the fee for introducing the customer to the property agent. In other situations, the customer that's bought the GetGround package actually agrees to buy the property there and then. It's like, yes, actually, I just want to buy this property. In which point they don't even need to speak to our property partner. We will just send the property partner a reservation fee, and the reservation deposit will go to the partner. So an even easier sale. So it can happen in both those ways. Great. Well, I don't see any more questions popping up. We're delighted to kind of have spent the time with you today. We're very eager and keen to have any follow-on discussions that come off the back of this. I think this video has been recorded as well. In case you found anything in it that was interesting, that you'd like to share with your colleagues or your friends, we're happy to kind of send this video around as well. And thank you very much for your time, and more importantly, thank you very much kind of for all your support for GetGround. Thank you. Bye.
Thanks, bye.